Welcome to Trading Lounge and the Commodity Futures Report for Friday, February the 11th, and starting with the 10-year yields here. As expected, we've seen them push up through to the 2% mark, so nothing new about that. They'll push a little bit higher and then they'll roll over. They may find support here, but we would need to go through a pattern like this. If that was the 2%, we'd need a decent high here, and we would need this correction over here, and then we'd need this here. We've been looking for the market to move up. This box here is the 61.8% retracement level. So we're going to see the market, because of the 2% and because of that, we're going to see the market stick there. We've been looking at it as an A and a B and a C wave here. The wave 4 is a little bit big, but still 1 and 2 here. We've built it up to 3, 4 and 5 here. So anyway, we'll give it, as mentioned over the last few sessions, we'll give it some time up here, and then we'll understand if it's going to be going any higher than that point. So yeah, just give it some time. The US dollar index here, this is a monthly chart here. This is the problem, the puzzle we need to solve. It's a monthly chart. So from this low here, we can look at this as wave A or wave 1 here, wave B or wave 2. Then we've got 5 waves up here for either wave C as an A and a B and a C wave here for wave A, or we could look at it also as a new wave 1. So wave 1 over here, wave 2, and then wave 1 here, an A and a B and a C for wave 2, and that would leave us going much higher at that point. Is that possible? I don't know. I'm not an economist, but that's the pattern. The other pattern here is that we could look at this as just mentioned, an A and a B and a C wave here for the A wave, and then an A, B, C, D and E wave here for wave B, and then push up to wave C. So there's a few variations that we can look at, and we just need to confirm either of these moves. We really need to just move past certain points to be able to confirm that. We can see on the monthly stochastics here that the market's moved up quite high. Of course they can flatline, like when they take out old highs here, these sorts of indicators just flatline at that point. So you know that. I mean, they're quite useful in terms of all the stochastics, in terms of the speed in which it moved up. So this moved down through here, as this moved down through here, then this hasn't quite moved up to this move up here, even to the 10,000 CFD product here, but it has moved back up to this point. So it's telling me that it's possibly corrective at that point. Now there's different ways to count this up here, but if we're looking at the triangle pattern, which we're looking at the reverse on the Euro US dollar, which you can see that on the long-term wave count on that for on the indices, the European markets video, and yeah, so that's kind of where we are at this point here. So even in this trend up through here, there's a good case for using this low and there's a good case for using this low, so it just depends on which one you want to use here. So this move up here, we may have a top in place, or we may just be getting an ABC correction and then another little move up, but either way, very shortly we'll be seeing this E wave come into play. So just moving into the daily chart here, so there's a good case for looking at wave 3 here with wave 4 here and wave 5 down here, even though that it hasn't made a new low here. That's what happens when you're close to large numbers. They tend to skew the wave count a little bit, but yeah, counting 5 waves down here is okay. You could even count 5 waves up here if you wanted to. But it counts much better as a corrective move. And even if you do that, you could look at it, as part of the whole trend up here. But that's not our biggest issue at this point, because the issue's in the trend here, because we can look at, there's no qualms about being wave 1 here and 2 here. Now, we can also put wave 2 over here, but when you pull this apart here, there's a good case for 5 waves here. So if you call that wave 1 and wave 2 here, then you would have to look at the rest of the structure to the upside. If that's wave 1 and 2, then you'd have to look at this as 1, 2, 3, 4, 5, just for the third wave over here. I mean, the blue wave 3 at that point. So if you had it at this stage here, we pulled that over to here, then then you can call a top in over here. So what I've always decided to do was, I understood that this was a fourth wave and we needed to move up there. We've done that. We know that we had to move down, so we've done that. This move down here, there's a good case for that being an impulse wave, so we'll look at the corrective wave coming up and then a move down, and we decided that we won't get involved in the bounce. We could trade the third wave here for a bit of a quick trade, but at the end of the day, we need to move past this ABC correction here, all down for one, back for two, down for one, back for two, and and heading on lower at this point. So yeah, we've either got one more high in or we've got the high in. That's the bottom line. So I need to move past this three-wave structure to figure that out. In the internal structure, looking at this on the tick chart here on 100 ticks, we can look at well, we bring in some more data here. So we've had our wave 4 going up for a wave 5. We can call it wave C up there as a top, but yeah, I'm not convinced about that just yet. So we counted 5 waves down through to here, and then we're looking for a B wave back up here. One of the Fed state members got all excited and said what he said about rate rises and so on and so on. So we've seen the markets spike around from equities to Bitcoin and back to the dollar index here. So I just let the dust settle here, but we're looking for a move up into 96.50, and let's just see how we go with that. This move here is 1 and 2 and 3, so we'll probably see 4 and 5 here, something like that. That could be the end of it at that point, but we need to move past it. But I wasn't really sort of concerned about all of this. If we had a nice scenario here, we get 5 waves down here and then we get 3 back again. Yes, we can trade the third wave inside this structure here, which may be a C wave or a wave 3. Either way, we have to wait for this to land, and then we need to be patient to see what we get here next, because that will determine the next whole trend. Will it be up, or will we be sort of moving on down here? So there's a lot of work to do all of this. I don't like to get into the guessing game. I'd rather say I don't know rather than I do know. And when I don't know, then we just look for things that we do know within inside the internal structure. So I was just interrupted. I'm not sure where we're up to here, but anyway, let's move on to the commodities. So iron ore, we're looking at this pushing higher here, and this will be in line for all of those stocks that are iron ore stocks, BHP, Vale, and all of those. We're looking at 1, 2, 3, 4, 5 to the upside. We'll look at our buying opportunity on this pullback over here in a classic trading levels pattern at the 50 here for BHP Australia, but there's BHP New York and all the rest of it. But just to give you an idea, that's what those iron ore stocks are doing. Gold, this is a weekly chart here. As you may know, we're looking for one more leg down here to finish this E wave off and then a push up. So this is really, this pattern here is the arrival, the reaction, the first high above the level, then the ABC correction here. So in terms of the classic trading levels pattern at 2000 with US spot gold, we've got the arrival, the reaction, then we'll see that push up there. Obviously folks think that it will be going up to 50,000 and all those sorts of weird things, but it'll pull back, and so anyway, we'll just navigate that situation. In terms of the weekly to the daily, I'll go to 2 daily here, just squashes it up a bit neater. But yeah, so we'll look for that rally. It played rather high here at the 78.6, but it looks like it's done a bit of a turn now, so perhaps we're sort of on track now for a 3rd, 4th and 5th wave down here to finish off this. There's normally some sort of equality between this and wave A and wave C, so thinking 1700, 1750 and all that sort of stuff. I hope it does come down here. I've got some pocket money to buy some physical at that point. And let's just go straight to, well, let's go to the 4-hour chart just for a moment, just to gather our bearings a little bit. So from wave B here, we're looking down for wave 1 and back for wave 2. So yeah, look, we hung in there, and I was sort of really using the 1830 here as the line in the sand. Now, this downtrend will not be confirmed unless the 1820 becomes the retested resistance. So we'll be looking for hopefully something simple like that, if that's the 1820, or it could be a little bit more complex where it comes back above the level and then goes down. Without this 1820 as the resistance, we're not in a bearish market yet for this. So we need that classic trading levels pattern there, because what I normally find is that when a market's traded, this is 1800 here, which is a minor level, and this is 1, 2, 3, 5 and 8 here, sub levels to the next same number, same degree here. Within group 1 here, if the market's been moving up here, then it comes back and finds that number 2, 20, as the resistance, then it's pulled down to the closest largest number, and then we're on our way at that point there. It does look like the stochastics wants to see it sort of push up, but I can see that it's opening. It still needs more downside. So look, is that the top? There's a pretty good case for it at this stage, but it's not confirmed. On the tick chart that we normally look at, 100 ticks, and we'll bring in a bit more data on this to bring it up. So we'd been looking down for wave 1, and then the A wave, the B wave, and then counting up here. It's a bit messy in here. I had another crack at it, but I really was just waiting to see how this plays out here. Now, obviously, this looks like wave 1 and 2 and 3 down here, so I won't get into it today too much, but let's just see how this develops here, and then we'll pick it up from that point. Now, yeah, so we'll see how that goes. Rightio, so moving on to silver, and silver's the other one as well. We're looking at an impulse wave down here and then a move back up here. It looks quite impulsive here, I must say, to the upside, but it hit our target at 61.8%. We'll go into the tick chart and just check on that. So once again, we've got that nice move down here, and I haven't had time to pull this apart just yet, but probably at the bottom of a long third wave within this space here. This is our box here that we were looking for that move to come back up on, and it was also quite a long journey as well, coming up from wave 1 here as an A and a B, and I thought this might be the best count here with 1, 2, 3, 4 and 5 up here for wave 3, 4, 5, but I'm a little bit unsure about that. You can check that. All I wanted to really see was it to hit the box and turn, and let's see what we get here at this point. I mean, we still could be sort of bullish, but then we really need to be putting on long trades at that, you know, at some point. When do we go bullish? So we'd still need, obviously we can go long above this high here, but we'd like to see a second high that we could work with as well at that point. But otherwise we want to see it work lower, in line with our wave count. So we'll just see. You know, sometimes we get it right, sometimes we don't. So crude oil here, as you know, we've been counting up as 1, 2, 3, 4 and 5 up here as a possible serious top here, or we could have all of this as wave 1 and back for wave 2 here. But either way, once again, we're just waiting to see what we get up here. We traded long up here, even in this last little wave here, and so it's just really been a waiting game at that point. Let's go to the tick chart here, 100 ticks, and bring in a bit of data here for that. So yeah, so we go on wave 3, wave 4, traded up here, got out here, waited for it, and it kind of looks like we've got a little bit of an impulse wave down here, as I discussed yesterday, and then we're looking for a 3-wave counter trend, which has come into play now, so that's all good. You know, if that 900 became the support, $90 rather, then we could work that. But it does look like we've got some sort of, you know, A, B, C to here, or an A wave here, B wave here, and C wave. It looks corrective, so we should see this, you know, try to retest this 90 again here, and then work lower at that point. So we'll see how that's looking, but yeah, it's good to see this being, you know, this being corrective to our target here at 61. You know, the 90 really. It could have been shorter, it could have been longer, it could have been right on there, but it's all about the 90 becoming the support or the resistance in this case. So there's probably a bit of a recheck within all of that. It looks like 1, 2 and 3 and 4 and 5 here. So anyway, we'll see. Obviously, there's going to be support here and a bounce and all the rest of it. So after Friday, on the Monday, we'll start looking perhaps for some short trades here if we get the right setup. Yeah, just going back a little bit here to where are we here? Just go to the daily chart first. See, the situation is we've got this 1 and 2 here, and then we've got the third wave here. And the problem that I've got here is that we can either have wave 4 here and wave 5 here for that, and then we've got all of that as wave 1, and we've pulled back for wave 2, and then we've got wave 1 and 2 and heading higher at that point. Or I put wave 4 over here, there's a case for that, and put wave 5 here, and we've got, we've got this wave 1 here, or wave A here, and then we have a deeper pullback at that point. So we're either going to have a pullback that would be the 50-60% sort of area through here. Oopsie daisy. So I'll do some work on this on the weekend and have a closer look at all of this. And because the other thing that I've been trying to confirm as well is that I wanted to make sure that I've got a top in play here, and then we could start working either this one, this one down here, or this one a bit deeper in this case, I'm not quite sure. I know that we're in a bullish market here, and this is in line with quite a few commodities actually. So when we go back and have a look at the monthly chart here, this monthly chart here, is like we've talked about before. We've got this odd wave count down here for wave 4 here, but there are other markets that are like this as well. Obviously, so you can kind of see it now, can't you? You see that 1 and 2 here, and how do we count this finish here? Do we pull this back here, or will we push up to the trading level 1 and have a little dance here? And then, but it's basically bullish as hell, and we can see that. Well, we can see that in the emerging markets as well here. So, and this is also the same as copper as well in a bigger sense as well. So it's just they're all, this is why we're in a commodity boom market at the moment. So we can count that up here as 1 to here and 2, but it's not showing me a very good 2 wave, but I can get 5 waves out of that. So, but either way, if you're looking for an ETF to trade, and then this is good. Commodities good. Yeah. So, but we'll have a look at this again when we have a look at copper, which I think we can do now. So this is the bigger pattern that we're looking at here. So, yeah, it's big. Well, this is copper here now, so it's also got the same count. So this is US copper. LME copper has got the same thing as well, but the A, the B, the C, the D, and the E here, and we're going up here. We can count 5 waves up here: 1, 2, 1, 2, 3, 4, 5, 4, 3, 4, and 5. But I've been treating this as a 4th wave triangle, but it looks okay like this as well. But I'd have to go WXY, but. And look at all of that as a wave 1 and 2 and moving up here. But I've been looking at it in terms on the daily chart as, but this, just before we go, I mean, this, the copper here, I mean, it's got its own story about being, moving into the green world with nickel, because they're all, nickel and copper, they're all like, in that vein. But really, it's this, like, also emerging markets here, and this is quite oil based as well, by the way. That's displaying, massive moves to the upside. Will that create inflation that we're talking about as well? But let's just, I don't know about that. I need to mull it over a little bit further. Let's just have a look at this on the daily chart. So I've been looking at it on the as a wave 4 rather, but I know that it can be viewed differently, but I'm not that fussed at the moment. All I needed to do was work out the end of this, which I feel like I have done. Can this be counted as some sort of 1 and 2 in here? I have to scratch my head and force things around a little bit and make it squash them in and fit, so it'd be a bit of a sandwich. But yeah, we've I think we've done reasonably well with all of this. So it's like it's popped out now, and yeah, it's popped up, but it's lost. It will find its feet and hopefully move up further with all of that. On the tick chart with this, we can look at getting in a bit more data. Is 10 enough? So yeah, from this wave 4 here, we've been counting it up as 1, 2, 3, 4, 5 for 1 and 2 here. So get some trade setups here. We've got a bit of an impulse wave here as well. Do I call it wave 3 up here, or should we be looking at this as you know, another wave 1, so to speak, here? Or probably not the case here. Probably what I need to do at minimum here is put this as wave 1 here, and then use this wave 1, copy that and put that here, and come back for a wave 2 over here. So I'm not too sure if we've got like wave 4 or wave 2 over here. And look, this, I may even need to crank that up to another degree higher. I just need to kind of sit with it for a while and get my perspective on it. But we've only got 3 waves to the upside, so we're still going higher. We will put in another long trade on that high there. We didn't quite find support within group 2, so we got 45 here. So 1, 2, 3, 5 and 8. When we talk about 8, we talk about group 2, so 65, in this case 46,500. CFD product here, so reminds me of Bitcoin price there too, so at the time. We're not in group 2 yet. Once we get into group 2, then we'll be leaving the number 5 at that point. I think that what we'll get here is some sort of, I don't know if that's associated as an ABC here, I don't think so, but otherwise we'll get something like that, and then we'll move up and we'll take that long trade here down to here, and then we'll move up that way, or if I can see it better, we'll move in again here. But that's where we are. I want to get these 2 trades to break even. Don't like losing money. Once it's in the piggy bank, it's got to stay there until the hammer comes. Yeah, so look, anyway, looking good, whatever it is. All we need to do is chill and just allow the market to reveal itself, and then we'll make our decisions on that. Now, nickel. So we talked about this yesterday. We talked about it in terms of a couple of different ways. First of all, let's go here with wave 1 up here, and then 1, 2, 3, 4 and 5 here for the A wave. And then from an A wave, we want to go up as an A and a B and a C wave here for the B wave in blue, and then down in 5 waves for a C wave over here with wave 2. That's one direction that we've got with this. Now, that's a bit flimsy based on this, just that little spike making a new low there, because if that didn't occur, then I would have been left here with an A wave and a B wave and a C wave, and we've got wave 2 in here. And we can forget about the spike, and then we can look up here as wave 1 up here, and back for wave 2 here, and then up for wave 1 here, and back for wave 2 here. This is the 50-60% retracement level for this ABC for the blue wave B here, minute degree. So we can go long above there. We may get a better trade, but if that's click there, then what we'll be up against is wave 2, and wave 2. So we'll be in the third of the third of the third. So this thing will rocket at that point, you know. Will that happen? I don't know, but get it set up, you know, be ready for that. Could be exciting, could be very sad, so because we could get, you know, this down here as wave 1 here, and then back for wave 2, and down for 3, 4, 5, and we'll have to pick it up at that point. So what will happen, I don't know, but in both directions we've got it covered. Let's cruise into uranium. So this is just 100 ticks over here, and as you may know, we've been looking down and calling the other day, we called this in as wave C here because that got triggered up there. So we've got that as wave 1 and 2 here, and then we've got 1, 2, 3, 4. So we're looking for a bit of a pop here for wave 5. Now, even when we move up here to wave 5 of 3 here, in reality, it could also be an A and a B and a C wave up here. So we would still need to get a wave 4 to be confirmed. This wave 4 should pull back to that wave 4, and this wave 4 here might get a little bit more complicated as well. There might be an ABC in here. I haven't pulled that apart. So we need, before I can confirm anything up here, we need to basically take out that there and figure out that this is actually a wave 4 at that point. It may not even go like that. We could end up going 1 and 2 and 1 and 2 and continue to move up at that point. So at that point we'll be Well, yeah, that's the tricky bit here. If we go long here, we could get trapped here. At least with this one here, we can manage the risk a little bit better. So I think that we will take the chilled out route here. So we'll just make sure that we get that we'll get that right. And anyway, if I get it wrong and there's 1, 2, 3, 4, 5 here, we'll get this. We'll get the other side of it back here on this wave 2 anyway, or a classic trading levels pattern here or here. Well, so look, it won't be perfect, but it will be good enough. You know, that will be the end result. With gas here, yeah. So, I mean, the more I read about gas and renewables, it's sort of, you know, it's gas competing against coal and all that sort of stuff, and you know, and gas is going to win out, and now renewables are, you know, it's like a donkey race really, and it looks like the renewables are, you know, really taken on the gas market. So I don't know about, you know, what this has really got in here, but we know that from this low we've got 5 waves, 3 waves and 5 waves. So we've got a corrective wave here, but the thing is, I don't have a very clear impulse wave down here. It's like it's a corrective wave down here, so we can call it an A, B, C, D, and E here for the B wave. And yeah, it'll probably go up with the rest of the commodities at some time, but I just feel that we need to go through this area through here. So that's the weekly chart, and on the daily chart, as we've talked about all week with this, the A wave, B wave, and down from the B wave, we've got an A and a B and a C wave to come into play, and then a D wave here, and then an E wave over here. So if we go straight to the tick chart and pick it up from B to C and bring in a little bit more data here. So this is our journey down. So what we can say coming down here is that we do have 5 waves coming down here. So we need to look at that as the A wave. There will be some sort of B wave coming in, and there'll be a C wave here, and then there'll be 3 for the D, and then 3 for the E over here, and you know, it'll be something all like that, and we can navigate through it, and we'll get some of it right, some of it wrong. If you wanted to trade long here, then, well, the thing to do is we got, yeah, it looks a little bit impulsive, and that's corrective, so we'll take out that high. So you'll be able to use the medium level here as the classic trading levels pattern. So that will be the arrival, this will be the reaction, there'll be 5 waves up here, and then there'll be some sort of little corrective move here, so you can go long here. You could probably go long here, but you'll need to leave the stop under here at least, and we'll need to check it out on that side there. That's 1 and 2, 1, 2, 3, 4, that's 4, 5, yeah. So we can just label that a little bit here just to make life a bit easier. So it's 1 and 2 there. This is 3, and that's 4, and that's 5. So that's really what the classic trading levels pattern does. It's wave 3, 4, and 5, and then the ABC pattern here. So going along over here, you would need to get out. You look at that as 1 and 2 and 3 and 4 and 5. So if you got out at, say, 4,020, that would be okay, you know, and then get back here. But the risk reward ratio is kind of a little bit slim, but anyway, we'll pick it back up here, and we can go long at that point once we've got those 5 waves there. Those 5 waves there will tell us that we're going to get another 5 waves. So yeah, so those 5 will tell us we're going to get another 5, so that will make it a little bit easier, and we can sort of start drawing pretty pictures about how to get in and out and all the rest of it at that point. That's Bitcoin. I'll put this chart back, and wish you a great weekend. Alrighty, thanks for listening. Cheers.